Good afternoon and welcome to HYCM's webinar, FX Week Ahead, looking ahead live market analysis with myself, Giles Coughlin. I'm really glad you could join me for this. I'm just going to wait for folks to come in and say hello to folks. Hi, Aaron, Nadir, Ravi, Sami, Van, Vishal, good to have you back, guys. Looking forward to this session. We've got a very busy week and there's some good potential opportunities coming up this week. So I'm looking forward to going through it with you. Just want to check you can all hear me okay. Hi Nadir, well done. You beat me to it, you know. Yeah, hi Raj, good to see you. Okay guys, that's great. Really looking forward to this session. Just before we start, do my usual disclaimer. For those of you who are regular, you know that the whole idea of this FX Week Ahead is to show you how a professional trader goes about making decisions in the market. So that's what I'm going to be doing. I'm going to be showing you the thought processes that I use, and then how I use technical places to define and limit my risk. And as we're going through different scenarios, I'll be going into some detail, but this is not trading recommendations. It's simply showing you for your education so you can make your own choices going forward. So just making that clear, particularly as we'll be looking at a few charts together as well. And there's some really live market situations happening as we speak, particularly with Brexit negotiations. So looking forward to getting stuck into that with you. And I think most folks are coming in now. Yeah, that's great. Hi, Sami. Hi, Vishal. And yeah, that's great. Okay, so before we look ahead, we're going to look back to see what happened last week. So we just get everything in the correct context. The more context you have of the market, the easier it is to really understand the significant events and especially changes to market dynamics. So looking back last week, we had some significant detail out for US oil. We had the International Energy Agency's monthly report out last week, and they're maintaining the forecast of global oil demand growing for 2019, staying at 1.4 million barrels. And it's been supported by strong non-OECD consumption. Global oil production has fallen, and that's indication that the OPEC cuts are starting to work and production is falling, which means the price of oil has been rising. When you look at an oil chart, you can see over the last few weeks, oil has been appreciating as the OPEC cuts have been really taking, having impact in the market. We got furthermore, OPEC crude oil production in February dropped by 240,000 barrels per day to 36.8 million BPD, and we have global refining throughout return to growth, with the first quarter expected to be up 0.8 million BPD. The key issue here is that OPEC is saying that we're going to carry on with our production cuts. That's really what the market's been focused in on recently. And the IEA monthly report really confirmed that those OPEC cuts are starting to be seen in market production. You can see here crude oil production dropping, global oil production falling. So that's one of the reasons that oil has been bid. And last week that provided good opportunities to buy oil on this report, because this report is really saying what OPEC has been doing has been working. So therefore, you know that oil is likely to be bid in the next coming sessions. And if you look at an oil chart, you see that oil was bid from key technical places going into the close of last week. Just today, the latest on oil is that the Iraqi energy minister has confirmed that the next OPEC plus JMMC meeting will take place in June. And OPEC had been saying that they wouldn't recommend having a meeting in April. That's going to be confirmed now, and the meeting is going to be in June or possibly the end of May. The exact date will be confirmed in the next couple of weeks. And you've got the Saudi energy minister, he's stating that there's general consensus regarding the need for an extension of output cuts. So there's been lots of talk this morning about output cuts are working, want to see further compliance with them, and the meeting in April has been cancelled, next one to be in June. So between now and June, what this is telling us is that the oil is likely to be bid from key technical places. So looking on an oil chart, looking on a swing trade, look to buy oil on places of support. Okay, so that's just to know that we're likely to see the bids carry on, and we know from seasonally this month and next month will be is seasonally very good for oil. So the seasonals are good, the fundamentals are good. So swing trading, personally, I'm looking for bids, looking for buying oil over the next few weeks. Obviously, this is a live situation, so you have to keep in tune with it. If this changes or the outlook changes, then obviously our expectations of where oil will go will change. Okay. Furthermore, looking back to last week, now as we look forward to this week, we're going to see that the Federal Reserve will be meeting on Wednesday. So just good to recap, where is the Fed? What are they doing? Well, at the end, sort of the start of last week, Fed's chair Jerome Powell repeated that patience is the right path for the Fed. That's kind of the word that sums up where the Fed is at the moment. They're being patient. They're looking at the data and they're thinking we're quite happy with just monitoring rates as they are, leaving them as it is, and only responding to a rate hike or a rate cut depending on the data. So, just some news out for Brexit. DUP, a breakthrough in DUP talks unlikely today, so unlikely to get a breakthrough in Brexit talks today. That's just come out on the news wires. Just a quick sell. I've just made a quick few points. I'm just selling that on that headline. Just take a few points. I don't think it's going to go any further. We'll leave it for a little bit. Just waiting. Yeah, I'll go through that headline in a minute. No, that's it. That's all I've got. Just take a few points there. Brexit, like from a political editor, they just suddenly said a breakthrough in the DUP government talks unlikely today. That's kind of what the Brexit market has been hoping on, and there was just a little confirmation that wasn't going to be happening today. I just sold a quick few points on that news. I've been looking at headlines trading recently with Brexit, and that was just a quick example of how to do it, trying to jump in quickly, in and out. It wasn't really a massive market move, but I didn't want to miss it in case you get a lot of movement there. Okay, so looking back to the Fed, that's the situation we're on. And what the Fed's doing here is they're patient. And last week we had US dollar retail sales month to month on Monday came up plus 0.2%. month on month versus 0.0% expected. So that was a little bit better than anticipated. The December retail sales were still very poor. CPI data on Tuesday was plus 0.1% versus 0.2% expected, so a slight miss. And then we had the core durable goods on Wednesday was minus 0.1% versus plus 0.1% expected. So again, that was a slight miss on those data. Just looking at the pound falling down to 1.3245, we're seeing a bit more selling carrying on in the pound now. Obviously, the disappointment of the DUP deal isn't working, is just following through on that situation on the pound at the moment. PPI data was plus 0.1% versus plus 0.2%. So basically, at the bottom line, there was a mixed bag of data out for the US last month. And that mixed bag of data has had the effect that the Fed is still going to be on a pausing rate. They're not going to be changing that pausing outlook. It's going to stay. We're on pause. We're holding, and that's what we can typically expect going forward. Looking back to last week, we also had the Bank of Japan rate and policy statement. That was on Friday, the 15th of March, and they basically stayed on pause. It was expected that they would stay pausing, and that's exactly what they did. They're pausing their rate program. They're not looking at going any further, and they are in a wait and see mode. What they did say is they did expect exports and outputs have shown recent weakness. So that has been a new development for the Bank of Japan. So just to be aware of that, as that the Bank of Japan's rate and policy statement has come out at the end of last week. The other things to be aware of is that we've had 3 dovish central banks recently. Just wanted to remind ourselves on those, the dovish shifts that we've had. You know, the Federal Reserve went on to a position of pausing, and that pausing has kind of translated into other central banks as well. The Reserve Bank of Australia, Governor Lowe, says difficult to imagine rates rising in 2019. So he too is saying, look, we're on a, you know, we're kind of neutral to dovish. Just to be aware that that's happened. Now, this, I have to be aware, this is not necessarily tradable now because this news has been priced into the markets, but this is just for helping us to understand where the central bank is. Australia thinking difficult to imagine raising rates. We also see the Bank of Canada changed its outlook, had been quite hawkish, and it's changed from a hawkish perspective to a more negative perspective. And that change is quite key. You can see that they've been watching closely developments in household spending, oil markets, and global trade policy. And they're saying, given the mixed picture that the data presents, it will take time to gauge the persistence of below potential growth and the implications for the inflation outlook. You know, we're going to see inflation data out for Canada this week, so that's going to be key data for the Bank of Canada. That's just worth bearing in mind. They've changed their perspective, and the European Central Bank has taken a dovish tilt. They've changed their forward guidance on interest rates, so they're thinking we're only going to raise interest rates later than we had previously expected. They were saying summer 2019. It's now more to the end of 2019 to raise interest rates. So that is a you know, a live situation that is working as we speak. So just to be aware of that and to recognise those dovish shifts that have taken place. They also slashed their growth forecast from 2020 1.6% versus 1.7%, 2021 1.5% versus 1.5% prior, and inflation forecasts have been cut down as well. So keep that in mind and be aware of those that shift from the European Central Bank. It's something to follow, and it's something to be aware of going forward, and try to keep in your mind where all the central banks are. Ideally, you should be able to know, you know, from your memory, you should be able to know what is the outlook of each central bank that you can see. That will be very helpful for you going forward. So that's just a way of reminding and going back that way and seeing that shift that's taken place. Okay, so we also had China's trade growth. Remember, that is really slow at the moment, and particularly we want to recognise that exports collapsed by 20% in February. So that's a very bearish outlook for China, and we have to remember that the US-China trade negotiations have been going quite badly recently, and they keep getting dragged out. We've covered that a number of times, but just to be aware that exports are really showing a lot of weakness in China, and the imports are dropping as well. So that's showing consumer growth is dropping in China, as well as exports manufacturing. So just to be aware of that kind of dynamic that's taking place. We also had last week Theresa May. She had very big news. We had 3 votes in Parliament last week, and those 3 votes were very significant. We won't go into the detail of all of them because it will take too long, but we'll just recap as to where we are at now with the votes. And basically what happened is Theresa May's Brexit deal was rejected again last week. UK Parliament said they weren't going to support Theresa May's deal. It wasn't good enough. UK Parliament voted on an amendment to try to take control of Brexit negotiations. What they wanted to do, they wanted to see is, could they take control of Brexit negotiations, and could they get it off Theresa May so that Parliament could take control? That was very important for Theresa May not to lose that vote. And she didn't lose that vote. She managed to hold it, and she managed to win that vote. So that was a minor victory for Theresa May last week. She managed to boot off and hold away those who wanted. Only by 2 votes it was, but she managed to keep control of her own Brexit negotiations. So that was very significant last week. And probably the most significant part was that Theresa May's UK Parliament has voted to extend Article 50. Now, this is essentially the agreement that Britain will leave the European Union, but by extending it, it means they can do it at a later date. That was the key issue about extending Article 50, allowing it to be done at a later date. That is the situation. And as a result, the pound had a very strong week. We'll just have a little look at the pound US dollar chart, and we'll see here how that worked out. Now, first of all, this 1 minute chart was a very quick sell-off that took place on the news that a Brexit breakthrough in the DUP government. That was what Theresa May was trying to get. She was trying to get the DUP government to support her deal. Now, the DUP are kind of key decision makers within the UK Parliament. The DUP kind of hold the balance of power for Theresa May. She had her elections, and her elections backfired, and she basically needs the DU party to get through any information, any sort of legislation she wants. She needs the DUP party to do it. The DUP said that potentially they could support Theresa May. That has now looks like it isn't going to happen. That's why there's that sudden drop in the pound, and the pound has sold off on that bad news instantly. Now, going onto the weekly chart, let's just see where the pound is. The pound is at a really critical place. It's just sitting technically above that 200 exponential moving average. Now, if the pound can stay above that 200 exponential moving average, the next target, say a deal is struck, okay? If a deal is struck, what we're looking to do is we'll be looking at various targets. Now, the first target would be 1.36. Now, let me just show you on the chart with pivot points on. Okay, this is the same chart, the weekly British pound chart, and you can see that the price is supported on this 1.3200 level, which is also a pivot point on the weekly chart. So say, the DUP change their mind before tomorrow or sometime this week, they suddenly say, yes, we will support Theresa May's deal, we're going to get behind it. Then what you can expect to see is the first target would be 1.3600. It would be that 200 exponential moving average, and the next target would be 1.3900. So just have in your back of your mind, look out for this data, that if the DUP support Theresa May's deal, or there's a sudden change in Brexit negotiations that means Theresa May's deal is going to be voted on and accepted, then the first target is 1.3600, which is just below that 200 exponential moving average. Then if you hit that target, the next target would be 1.3900, which would be the weekly resistance points. That's where traders would take profit. And then if broke above there, the next target would be the 1.42 level. Ultimately, those highs, but just 1.42 will be the next target if that level breaks. So just to be aware of that going forward. There is a lot of headline risk with the pound at the moment, so be aware of the dangers of trading the pound, that they can move on the headline, but also be aware where we are technically. If the DUP suddenly come out later this afternoon and say, yes, we're going to support Theresa May's deal, we could even see a move up towards 1.36, just on the expectations of Theresa May's deal being voted on. So we literally are at a pivot point here. So be aware, the latest news that's just come out, and this is a very live event. There's no way of really knowing what's going to happen here. You just have to respond to what does happen. So at the moment, price is sold off on the basis that a Brexit breakthrough seems unlikely, that the DUP government doesn't seem to be able to do it today. But just because something seems unlikely doesn't mean it won't happen, okay? So that's something you have to be really, really aware of, particularly in the market. You get rumors, you get misinformation sometimes, so you have to stay very kind of fluid with what's going on, and you have to stay alert on the headlines. So that's what I'm really focusing on. I've been focused on this last week. particularly headline news trading, and I'm focusing on it this week as well into these Brexit negotiations, and trying to you know, find that good entry when you suddenly get the market moving in one direction quite heavily, quite quickly. And that's when you want to jump in the trade. And the trade to really look for, and this is the one to hold out for, is the Theresa May's deal being voted upon. And if it's voted upon, you just enter with your stop just tight below here, 1.3150, and your first target is 1.3600. So that's sort of what, you know, that's what you'll be looking, that's what you're looking for in that situation. That's the kind of outlook for the pound. So that's just, you know, really important one to look at today. And you can see their price just sat, you know, hovering around that 200 exponential moving average. That's a real line in the sand as well, technically. And for those of you who follow me on the Tuesday, you'll understand how we marry the technicals and the fundamentals together, and how we use those. So that was the pound. Last week had a very strong week, and again we'll be looking for more potential strength in the pound this week if Theresa May's deal gets voted on. If it doesn't get voted on and accepted, then there's still going to be a delay to Article 50, so there still may be the pound being bid, but we have to wait to see exactly how the market takes it. Typically what I expect is the pound to sell off if Theresa May's deal doesn't get accepted, and then to be bought on the anticipation of Article 50 extending a Brexit. So I'm not sure exactly how the market will react to it at the moment. That's what I'd expect, but I'm certainly not trading that. I'll be waiting to see how the market does respond based on the information that does come out. So at the moment, we've got near-term selling pressure on the pound, just on that bad news that's come out of the DUP. So be aware of that for now, and look out for any deviation from that. Yeah, we're seeing more pressure in the pound. It's just 1.3241, making recent new lows in the last few moments, and we're looking at testing down at 1.330. So that's, you know, where we are with the pound at the moment. Obviously, headline risk. There's good risks. There's risks and opportunities with the pound. Try to steer clear of the pound if you're not aware of the risks and opportunities. So if you're not trading with full kind of knowledge of what's going on and what you're doing, then just step aside from the pound and wait for it to settle down post-Brexit, because it will settle down post-Brexit, however it gets decided. But for now, what traders are doing is they're looking for that big headline, the new move, and they're trying to get into that move as early as possible, which is essentially what I'm trying to do. Is just trying to get into a move as early as possible, so you can benefit and make as much profit as possible on those kind of shifts in price. So pound, US dollar, big focus for the next coming time. US-China trade talks, again, they have been in focus. Negotiations have stalled. Donald Trump and Xi Jinping, they say that the summit that's been planned could be delayed until June now. Okay, so they won't be able to finalize the agreement by April. So this date keeps getting pushed. Donald Trump keeps saying how great a deal he wants to happen. He keeps saying that, you know, we're going to do something that's going to be amazing. But each time the deal is getting pushed out, and that's because it's a very hard deal to reach. There's big problems between the two nations, and what they're saying is that there's a divergence within the Trump administration regarding the deal with China. So even Donald Trump is having some difficulties in organizing and agreeing to what's actually happening with the US-China trade deal. So that's being pushed out. So that's bad for risk. Risk has been good for today, but that's bad for risk potentially going forward. So just keep an eye on that situation and be aware it's not an easy one to solve. Again, China and the US is, if China and the US manage to get a trade deal, it's 40% of the world's GDP is organized and produced, is 40% of the world's GDP is produced by the China and US together, rather. Okay, so obviously a deal that gets done will be very important for the whole global economy, that's why the markets are so focused on it. European morning session, what we had is we had the UK FTSE was rising, particularly as the pound was struggling on Brexit concerns. That's the situation for the pound at the moment. It's been selling off today because going into Friday close, the hope was that the Brexit deal could potentially be solved by a DUP agreement. That seems very unlikely just as at this moment. But if it changes, the pound is going to be bid. We got US 10-year yields up 0.49%. We had the Asian equity markets that were up overnight. We've got gold is fractionally up, oil is fractionally up, being supported by the OPEC news that we've heard. And we've got Asian equities up overnight plus 0.69%, Hang Seng 1.37%, the Shanghai Composite up 2.47%. So we're on risk on sentiment in the market. And in the London European session, we had the biggest mover was the New Zealand and the Australian dollar pair, and you'd expect the high beta currencies, Australian dollar and New Zealand dollar, to be bought up during that time. Going into the FX week ahead now, this is where we get into our news for the week, and let's just call that up here. And going to the calendar that we have, the interesting data that we have the Reserve Bank of Australia's meeting minutes. So we know that the Reserve Bank of Australia have said they can't envisage seeing interest rates rise. They've gone to a neutral to dovish tone. So the minutes will be read. Think, well, has that been communicated properly to the market? So just see how what those minutes say. It's worth looking at them. We know that the Reserve Bank of Australia has been quite buoyed by good jobs numbers. So the jobs numbers is going to be important this week. We'll get down to that as we go through the week. We've got some more UK data, our average earnings. They've been very good for the pound as of late, but they've just been overshadowed by Brexit negotiations. So again, I'd expect those UK data to be overshadowed by Brexit negotiations. And that is the situation. And we've got a Tory Brexiteer just coming out saying that, Duncan Smith, please, there'll be no meaningful vote tomorrow. Okay, so that's just come out now on the feeds. So it looks like negotiations haven't gone well, and it looks like more selling pressure for the time being on the pound. But as I said, the key data, the average earnings, usually very important, won't be so important tomorrow. Similarly with the unemployment rate, these have both been good figures as of late, but they're not going to particularly be moving the market. Going further down until Wednesday, the main event here is the CPI data out of the UK, but it's the same comment as I've made earlier. The main date is the Fed's interest rate decision, press conference, and monetary policy statement. So the Fed has been on the wait and see mode. So the risk here is that they raise interest rates. That would be strongly bullish for the US dollar. Not expected, but it's not completely out of the question. So be aware that this is a live market decision. The data that we've had has not been anything to particularly push the Fed forward. So I'm not expecting an interest rate rise, and the consensus is there's not expected to be an interest rate rise. But this will determine the near path of the US dollar. So you need to be around for that. Read the analysis on it, read the monetary policy statement, and be aware of the press conference half an hour later, because the press conference will often move the market considerably. If something in the policy statement is expanded or scaled back, it's the press conference where it's going to happen. GDP data out of New Zealand, again, that's significant data. It's the fourth quarter, and it comes once a quarter. So make sure that you're around for that. That's potentially going to move the market in the next session. And we also have employment change out for Australia. Now, the Australian employment change is important. At the moment, 15K of 1,000 jobs are expected to be added to let's have a look, to the Australian jobs market. Now, before it was 39.1 was the prior reading, and this has been underpinning the Australian economy, really strong jobs. So if this comes in a very weak reading, we'll know that that's going to be sold off quite quickly bearishly. Okay, so we'd need quite a low reading to concern us there. Sort of minus sort of 30, 40, 50k. That would be a quite quick sell on the Australian dollar. And conversely, you've got to think that with these two pairs, this is a focus for the Reserve Bank of Australia's bank. So look at the data, and if this number was a really big number, then I think, well, that'd be quite good to potentially buy the Australian dollar into Thursday. But because it's a 15,000, I wanted to have a sort of a buy the rumor, sell the fact kind of trade, but that's not necessarily that good enough for me. And what we're seeing the Australian dollar appreciate at the moment, and it's at quite a pivotal point. It's worth having a look what the Australian dollar is at the moment. Let's just see. Let's just pull up the chart, and where is it? We've got it. We've got the Australian US dollar. Here we go. See the pivotal point we're just moving into that 50 exponential moving average. So I want to see how price closes today. If we're below that 50 exponential moving average, that's quite a bearish technical indicator. And then I'll be looking to see what that closes. But Thursday, what I'm really focusing on is that jobs number. So that's gonna give me an indication potentially on the Friday there may be a potential trade to take based on what those jobs are. So anything above minus 35,000 would be bearish for the Australian dollar, and if it's a strong number, that's going to be supportive of the Australian dollar. And remember to look at the full-time, part-time employment numbers, because that's important. It's not just the headline figure. We want to see, well, if the employment change increases, but it's all part-time employment, that's not as good as if it's full-time employment. And what's the unemployment rate? So you need to take all these data points together. What's the participation rate? It's no good having a really good employment change and you've got a low participation rate. We want ideal is a high participation rate. We want a high employment change of full-time employers. That's what we're looking for the best data. The SMB interest rate decision, nothing expected to be changed there. Worth just seeing, dropping in with the Swiss National Bank, see if there's any changes in their monetary policy assessment. Any alteration in either of those two factors are going to result in a reaction in the Swiss franc, but be aware that the Swiss National Bank is unlikely to move before the European Central Bank, and with this European Central Bank just keeping their rates stable, it's unlikely to see a reaction out of the Swiss National Bank. We've got the interest rate decision out of Bank of England. Now, two things to say about this. This is likely to stay completely unchanged unless Brexit happens, in the sense that Theresa May's deal gets voted through. So if Theresa May's deal gets voted through, this meeting from the Bank of England on Thursday, it's Thursday, March 21st, suddenly becomes really, really important. Okay, so if no Brexit deal is sorted, this will be pretty much a non-event. They will just say that we're keeping things unchanged. We're concerned about Brexit, and there'll probably be some more concerns about the fact that an unresolved Brexit is weighing on the UK economy. Business investment is shrinking, etc., etc. If Brexit is agreed, then this becomes very important, and there could easily be a interest rate hike. Okay, so that's the thing to be aware of, the interest rate decision there on the Thursday. And then on the Friday, the really interesting information, we have the Bank of Canada CPI data. So that CPI data, 1.5% prior, at 1.2% expected. And remember, the Bank of Canada had just changed their outlook from quite hawkish to quite bearish in comparison. So CPI data is obviously important, because the higher the CPI data is, that's the more likely there's going to be an interest rate hike, because that's the only way that the central bank can really control inflation, is through raising interest rates. So that is the key data that we have coming up for this week. I can't stress enough, there are really potentially good opportunities in the pound, so keep aware of that. I'll just close the webinar with these technical on the weekly chart. If Brexit gets sorted and Theresa May's deal is arranged, the target to the upside is 1.36 and then 1.39. Stops can be placed technically quite happily below this pivot point, because if price rises, it's likely to find support there. So a stop at about 1.3160, 1.3150 will give the trade enough space to breathe, and taking profit there 1.3600 and 1.3900. And if price did get to 1.3900, there'd almost certainly be some profit taking there. So don't get greedy if you get in. Just take your profit, or at least take partial profits at 1.36, and then if not at 1.36, definitely at 1.39. Okay, that will be the target, and that will be the place to do. Okay, guys, well, that's good timing. Don't forget, before I go, that we have a number of services that we do here at HYCM. If you're depositing $1,500, you get 1 hour coaching session with me. If you deposit $3,000, you get 1 hour coaching session with me and a 1 hour trading follow-up session. And if you deposit $10,000, you get a 2 hour coaching session with myself, then a 1 hour trading follow-up review, and 1 week's VIP support, which is basically me helping you with various trade setups you may be looking at. And I can give comments on, whether that's the right idea, where your entries, where your exits are, and that's the kind of support I offer on that premium service. That is all we have for today. But don't forget, tomorrow we'll be looking 1 o'clock to 2 o'clock GMT. We'll be looking at putting into practice some of this fundamentals skills we've been looking at during this week ahead. We're looking into getting into the detail. How to really look at entries, exits, how do we choose a pair, how do we choose what asset to currency to trade, and we'll get into some more detail with that tomorrow. Okay, guys, thanks very much for the week. I hope you have a good week. Look out for opportunities in the pound, and make sure you define and limit your risk, and don't take unnecessary risks in what could be a very volatile market. Thanks, guys, and I hope you have a good week, and I'll see some of you tomorrow. Yeah, cheers, Raj. Thanks, Nadir. Take care, guys.